Today, I'm going to explain how does a business owner making $250,000 a year is actually more than an employee making over $500,000 a year. And I've seen this site at first hand, and it's pretty crazy. A lot of people don't understand this. In this video, I'm going to break it down so to make it easier to understand that how does making a lot of money can still lead to you being poor. And in the opposite cases, making a really little bit of money, like $100,000 or less a year, you can still be really wealthy. It really depends how you utilize it. So first, you heard me right, as I mentioned earlier. How is it possible that someone making $250,000 a year take home more than another individual making $500,000 a year? So the key is how to retain and grow your wealth. That is the main point. Whether you know it or not, there are a lot of people who make a lot of money, but they are actually considered cash poor. I've personally seen it myself, and even there's like the economy is not doing as hot, there's still a lot of wealthy people, and more people have become more wealthier over the future. You just have to play the game. So meaning when they're cash poor, it is because they spend a lot and do not have the necessary knowledge or the skill to manage their income and prevent it from flowing out their pockets to unnecessary expenses. And then, that includes you and me in this case. But this is also supplemented by the fact that the tax laws in America wants people to keep spending, to keep the economy moving. Make sure to grind that to your heart. America wants you to always spend money. It's the way you spend it is how you become defining as rich or poor. So it is how you spend your income is the true definition between you're super wealthy or you're poor. So here are the benefits that you can leverage yourself that if you want to maximize your income efficiently. So the first thing you understand is open and register a business. So this is a very crucial because without registered business, with whatever state you are in, you will be classified as a person. I know, being a person is so difficult because let's be honest, when you're a person or employee, the government doesn't like you in this case, meaning they will tax you like no other tomorrow. Unfortunately, it is not very fair, and that's all what goes on with life. So corporations, on the other hand, they are not treated like a person and have many special privileges that include tax deductions or write-offs I mentioned in many cases that can be used to leverage goods and services that you may purchase under the company name. That's the key takeaway, which brings us down to number 2. Your business should relate to goals that you want to achieve. Let's just say that whatever you want to do, let's say you like to be a plumber, but it's really difficult to get the other type of things you want. Then you have to make your sacrifices. So overall, this means your business operating will have to be similar to what you want to own in the future, such as let's say you want to own luxury items, ranging from clothes to appliances. For example, you most likely will not be able to receive deductions for clothing if you run a car company because it does not relate on operating expenses. Meaning you can argue with the IRS, but they have the final say at the end. They consider business write-offs only for any business expenses that is required to operate. Keep that in mind. A lot of people like to argue with other tax professionals and say, this is what I need to operate. Let's put an example. When you're selling shoes, you're selling shoes and clothing. Do you need $30,000 bottle of wine for you to operate your business expense? And if you ask me that, and I ask you guys, as the audience, obviously it's a no. And some people like to push that, which at the end you'll get burned for it. Both of them, the who are signing off for the tax return and the person providing the information report. So meaning that the basic requirement for you to make money and function is to basically run a business that gets really similar to the goals that you want to achieve, which brings us on to the next topic, which is number 3. The business you want to create should be profitable because in business, there is no guarantee it would be successful. But there are some cases where individuals will try to abuse the system by creating a business so they can write off whatever they purchase, which they will not allow. This is why the IRS is there, is to catch those people abusing that. And there are some YouTubers who, I don't want to mention names, but they talk about business credit cards and say how you buy this and you can write them off even it's not a business expense. This is absolutely a no, and this is the reason why. As I mentioned above, your business must relate on what you want to own. So this means it has to be profitable too. If you open a business and it's not profitable, then they're gonna ask you questions like, why are you making these purchases when you're not even making any money for the company? You can put money from outside company and move it in, but it still doesn't explain the fact that this business, this entity you're running, is not making any profit. So it means that the income that you earn has to justify the purchases that dictate as a business expense. So for example, owning a car can be a mixed use for business and personal use. A lot of people has that question. And just comment down below if you have that type of issue, which honestly, everyone does, because it can help you a lot from deducting expenses. There will be a need to be a clear recording on what is business use and personal use in this case, for this vehicle. In this particular example, business will also have to distribute payroll to its shareholders and employees. The business cannot include your personal home, and if it has a mixed use, then you have to distinguish which is part of its use for your business. So the perfect example of this is you look at Jeff Bezos and Amazon back in 2018. How did they pay no taxes? And you have all these big YouTubers ranging down from PewDiePie, from other big financial YouTubers say, hey, they cheated the system. No, I'm gonna be brutally honest, because they don't understand the system. You understand the system. Amazon's move was extremely smart. Utilize the whole entire system, which, let's face it, for that type of corporation that size, they could abuse it. But at the same time, us small individual business owners, we still have those type of opportunities. What brings us down to number 4, which is taking home a smaller yearly income. So have you ever heard of the person named Warren Buffett? I'm pretty sure everyone watching my channel has heard of Warren Buffett, which he actually took home $80,000 a year, and he's a billionaire. So this applies to this situation here. And what he understands is that business get taxed way less, and he is able to have personal expenses as part of the path of his business operations. For example, eating out, cars, travel, gas, and etc. These are just a few loopholes and just scratching the surface on what can be done to reduce taxes. Take home small yearly income so you can pay off necessary expenses such as groceries, any other products, maybe bills, you have an insurance. Now, when you take the larger expenses items, you can put that into some things like cars, you kind of want designer items. You want to put those to be part of your business, because that is a loophole that a lot of people who understand the tax law and understand the code take advantage of. In conclusion, just understanding the tax laws in America will help you understand why some people who do not make as much as others are wealthier. It all has to do with spending and registering a business entity to make big purchases that could reduce your taxes. So this whole system is built on getting people to spend their money, continuously to spend. That's why it's really hard to find their net wealth. When they spend their money, they also keep the average American poor. If you guys don't know what you're doing, which is unfortunately majority of the population. So if you understand how the tax code works and use it to your advantage, then you will understand why America thrives on consuming goods and services non-stop in this case. And in order for you to be rich, you must provide services and to create wealth and purchase goods that also bring in wealth without being taxed. So this is just scratching the surface of how businesses operate, how taxes operate, and how someone don't make as much as someone making over $1 million a year can be poorer than a person making $250,000 a year. It's all about playing the game. And also comment down below if you want me to make part 2 of this video, because this is a very long series and enough people find interest in this, I'll make a part 2. In this part 2, I'll show more live examples. And examples how people can basically buy goods and services, buy Louis Vuitton, Gucci, Hermes, YSL, Saint Laurent, the list goes on. And when you understand this method and how people become really wealthy, such as Warren Buffett, and how Jeff Bezos didn't pay any tax in 2018, there's a lot of people who abuse the system, but you can't really call it abuse because it's part of the law. In this case, it's part of the law for you guys to click the subscribe button down below, and I hope you guys have a nice day. See you guys next time.